Yo, yo, yo! Welcome, welcome, welcome. You've made it back to the classic series, Accounting for Beginners number 30, Trenta. Number 30, boy, can you believe that? Trace plus 0. Alright, this is my classic series. If this is your first video of mine, hi, how you doing? If this is like your 30 or 40 or 50th video, welcome back. I'll put up a card to the best accounting playlist on YouTube. A little biased, but yeah. Now what are we going to do in 30? We're going to do equity. Equity. What is equity? What is equity, CPA strength? We're going to go over that. What is equity? Let's start with the definition here. Owner's rights to assets after liabilities have been paid. Damn, I jumped a little ahead of myself on this one, didn't I? DC Adler. DC Adler. Write that out. Debit, credit, asset, draw, expense, liability, equity, revenue. Normal balances, positive balances. Now we're doing equity today. What is equity? Now equity is part of the balance sheet. What's the balance sheet? I don't know. Well, you go down your DC Adler and you've done this enough to know assets equal liability plus equity. You know the balance sheet's right here. These three things is the balance sheet. We're gonna go with what is equity today. Now I know that the balance sheet, assets equal liabilities plus equity. So assets equal liabilities plus equity. Alright, we know that. Now that's probably gonna get ingrained in your head too, assets equal liabilities plus equity. It took me a long time to get that. I'm not sure why. It just did until I started writing down this DC Adler every morning on my practice papers, and then I just started noticing, hey, this is the balance sheet. Let's go back to the definition again. Owner's rights to assets after liabilities have been paid. That makes sense, right? This is what you have in your business. Let's say you have $10 cash. That's your asset. Now that's got to equal, that $10 has to equal, you either are liable, you either owe it to, either owe that $10 to somebody, or that $10 is all yours because you don't have any liabilities, or a combination of the two. I mean, maybe you owe somebody $5 of that and you own $5, or something like that, a combination. We're gonna make it easy here for this little example. We're gonna say that you don't owe anybody any money at all. You don't owe anybody anything. So your liabilities are 0. Your equity would be $10. That's really what equity is. It's rights to assets after liabilities have been paid. Let's go through some common equities, alright? There's really not too much on the equity. The main thing is the retained earnings. But anyways, stocks is a common equity. Now that would be stocks. I don't want to get too into the stocks. I really don't deal with them on the day-to-day basis for accounting. And in my opinion, it's a little more advanced than the beginning. This is kind of, what is equity is kind of like, I don't know anything. Those are the owners of the business, the stocks. That's a common equity. If you don't have stocks and you're not like a publicly traded company, one person, you're the owner. Jonathan Dorn, I'm the owner of the business. But I have, I have stocks, so they are the owners of the business. Just know that stocks, if you see stocks and a question or something like, what is a stock? It's equity. A common equity, a draw, or a withdraw. You're like, whoa, 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 dog, why are you doing that to me? Draw's right there. That is not equity. Yeah, I probably have to, we will do something on this again. This is the reason why I do Adler, because I like to keep the balance sheet right here. Draw is negative equity. So if you see a draw or a withdraw, shareholder distribution, a dividend, it is an equity. It is just negative equity That's why I switched it over here, because to have a beginner to have a journal entry with a negative equity doesn't really make sense. So a common equity is a draw or a shareholder distribution and dividend. That's how you get, say, if you got $10, you got $10 cash, and this is your owner's equity, okay, and you want to get it out of the business. You would pay the owners, and that's what you would take a draw, and that would you would take a draw, maybe say for $10 you want to clear out the business, so you take a draw for $10. You would take out this $10, so you would have a negative equity. I'll just do a balance sheet on that, but no draws a common equity. Now we're gonna go with retained earnings is a very common equity. Just know when you're doing journal entries, and I have a bunch of clients that I do the books for, you don't really touch equity that much. You don't really touch, maybe you have withdrawals, distributions and stuff throughout the year, personal expenses, but you don't really do a journal entry with the equity too much. Now retained earnings is the big one. RE, it's retained earnings. The earnings that are retained in your business. How does the retained earnings happen? Let's go with that. How do the retained earnings happen? Just know that we're doing equity. What is it? Just know, because this is kind of big. It's hard. This is going to be another video. Net income or loss becomes retained earnings. Let's just think about that. Say you made $10 one year. That is, so you've done the whole year. You're going over to the new year. You made $10, and now you've switched over to the new year, and you still have that $10. That was your retained earnings. So net income, when you made $10 and that one day you flipped over to the new year, so that was an earnings that you made $10 in earnings, and it was retained into the business for another year. As you can see, I used to not put out a lot of videos, because as more and more people started watching, thank you very much for watching, it's just a blessing. It's really changed my life. I've never heard really any nice things about me my whole life. It's only been negative, you suck, you're a piece of shit. More people started watching. I tried to be perfect with my videos, and I would say, no, that's not good enough, that's not good enough, that's not good enough. Meanwhile, I don't have any videos. I'm deciding I'm gonna let the people decide if it has any value, if it's good or not, if you want to watch it. And I'm just going to show up and do the best I can and let everyone else decide what's with it. So anyways, man, let's get these chippers up, man. I got to go to work today. I got to make that money. Deuces.